Good evening, ladies and gentlemen, and welcome to episode 12 of the Australian Gold Weekly Review. It's been a really exciting week for all of us, especially at GoldHub Australia, as we were a part of the Australian Gold Conference that happened in Barangaroo, New South Wales just last week, and Mr. Brian was at the forefront of it. So we'll be covering a lot of that in this episode, and we are really happy to have our returning viewers back. And if this is your first time watching, welcome. This is a series where we cover weekly moves in gold, silver, oil, and the ASX Gold Index, along with select Australian mining equities that we believe are worth your attention. However, from this week onwards, we will be following a new structure for our videos, which means that you will still receive uninterrupted access to our commentary of the markets. However, the second half of our videos, where we discuss specific stocks worth your attention, will now be available to members only. So if you still want to be a part of the action, we welcome you to join our members list, where you will continue to receive full uninterrupted access with fresh, valuable insights to supercharge your investment journey. And you can do this by going to the GoldHub Australia website and signing up. And it's absolutely free of cost. So when I say members only, or when we say members only, we're not charging you anything for it. The only thing that you will have to pay for is the investments that you make. Apart from that, at GoldHub Australia, we're coming up with new ideas each and every week as we collect feedback from you after we've mentioned multiple times that we want this to be a joint project between us and you. And using that feedback for the members only section, we will now also be getting into insights such as our portfolio performance for the week. Which stocks in our portfolio performed the best? Which stocks in our portfolio didn't go that well? What is our diversification looking like at the moment? These are all the things that we will be discussing for members in our upcoming videos, so stay tuned for that. And lastly, we want to let you know that none of the content that we discuss in this video qualifies as financial advice, and we recommend that you seek a licensed expert if you're on the outlook for financial advice. So without any further ado, let's get straight into the video, and let's start off with gold. So gold opened the week at around $4,000 an ounce, which was a surprise in itself, and by Friday it finished near $4,253, delivering a 6.325% gain. Now this is the largest gain that we have seen ever since the start of the Australian Gold Weekly Review series, but $4,253 was not the cap for gold for the week. In fact, gold almost reached for the $4,400 mark as it closed at $4,370 just a couple of days ago. I still couldn't believe it. I remember I was in my car when I checked the gold prices on late Thursday, and I just saw gold racing towards $4,400, and I just couldn't believe it because just a day ago gold had crossed $4,200. So we've reached that point of, I think the right word to use here would be frenzy, where gold is changing in the $100 an ounce range day on day. It's going down by $100 or it's going up by $100. Early in the week, we saw steady accumulation from risk-averse players as cracks in the US regional banks widened, sending ripples of stress across global credit, and that tugged safe haven flows into gold more aggressively than many anticipated. And as gold pushed forward throughout the week, $2.83 billion of ETF inflows and central bank buying acted as structural buttresses, not just knee-jerk flows. And analysts at HSBC have now upgraded their 2026 target as momentum gains steam, and their target for 2026 is $5,000 an ounce. Now, there is something that not many news channels, except for Reuters, I believe, which is a digital media company, are covering, and that is the fact that it is currently festive season in India. And in festive seasons in India, there is an extremely I would say relatively extremely higher demand for gold and other commodities as well in the form of jewelry, which is, in our opinion, contributing to gold's unanticipated rally this week as well. And I think we will continue to see it for at least a week more because the festive season in India ends a week or a week and a half down the line. And demand in India as well as Asia as an extension is going to continue to be at elevated levels as the Indian population is spread well across Asia and not just India in itself. However, by Friday afternoon, we saw a bit of profit taking. Momentum was extreme with RSI indicators flashing overbought. GoldHub Australia has tweeted across several accounts on Twitter talking about their stance on gold prices, saying that the RSI indicators have been overbought for the longest period of time, and some long holders squeezed out into intraday strength. The market was asking, how much higher can this go without a correction? And now my question for you, Mr. Brian, is how much higher can this go without a correction?
It's funny that you asked this question because as you mentioned, on in the US markets on Friday, gold actually pulled back significantly, and by about $100 from its peak, closed at about 42.50, I believe. No, 42.75. It actually managed to gain back. No, sorry, 42.50. In fact. And silver, I thought silver is also worth mentioning, but I might leave that with you because you're going to talk about that next. How high can it go? Well, I think we might be seeing a pullback for now. I'm not sure how far it might pull back first, but and the reason is because, correct me if I'm wrong, last week when we talked about the pullback on the Thursday, and then it actually bounced up, we thought that perhaps we might actually have a period of consolidation, except gold actually went nuts this week. Every single day I was waking up and I was like 4,000, 4,100, 4,200, 4,300. But I did actually mention to some of my newsletter readers, and also on Ausbiz, where I appeared on Thursday, I expected that a correction seemed to be near, and this is exactly what's happened. I can't really answer the question of how high gold's going to go, especially because my leaning is gold is now possibly turning around, especially given, besides gold pulling back, we also saw silver, the PGEs, as in the platinum group elements, and gold stocks pull back significantly. But I might pass it back to you because you've also covering the other metals too.
Yes, for sure. And I think we're going to have to wait for the festive season in India and as an extension in Asia to end before we see a healthy pullback in gold prices, because demand for the next week or so will definitely remain at elevated levels, especially considering gold is heavily sold in the form of jewelry as well, which is highly coveted among Indians during festive seasons. Now let's move on to silver. Silver followed suit with gold, though not as much as gold, as it increased by only about 3.49% this week. It is currently trading at $51 an ounce, I believe, but during the week it did reach for the $54 mark, and in fact I think had crossed $54 as well. And it's funny because I remember just weeks ago we were talking about whether silver will cross the $40 mark or not. And that was a huge debate. I had labeled $40 as a psychological level in one of the articles a few weeks ago. And that level has been broken like long ago. And now we were talking about whether silver will cross the $50 mark. And it did cross that as well with ease. And now it is, the rally is pulling backwards with a decrease from $54 during the week, midweek, to $51 an ounce now. Moving on to oil, by contrast, oil had a tougher week. It started at around US dollars 58.93 and ended near US dollars 57.24, which is a slip of 2.86%. And the story is the same this week as well. Oversupply fears and demand softening. IEA issued warnings of a looming surplus heading into 2026 as global demand growth slows, while US inventory figures showed builds during seasonal refinery shutdowns. That combination undercut near-term tightness, and also rumblings of a diplomatic detente, especially talk of a Trump-Putin meeting on Ukraine, removed a layer of geopolitical risk premium from crude. So, Mr. Brian, what do you have to say about the position on oil? Because when we started the series, the narrative was completely different. It was about too much demand and very less supply. And within weeks, we saw the narrative completely shift on its head. And now we're having a look at oversupply fears and demand completely softening, with the gold oil ratio reaching for 70 barrels an ounce. So what are your comments on that?
Yeah, the thing is, I found it interesting that oil has actually turned down below 60 US dollars a barrel. I thought that it was going to remain between 60 to 65. And you would think that the global economy is moving in the right direction if if there's greater demand for oil, then the global economy should be moving in the right direction. But it seems like the oil supply has actually increased without a significant increase in the demand for oil. So clearly there are some key economies out there that are actually struggling. If you look at China, for example, China being a large consumer of oil, and of course the US is the biggest consumer, China has looks like they're giving away signs of economic weakness. We know that if you delve deeper, the property market in China is in a lot of trouble. Industries in China, despite the Chinese Communist Party beating their chest saying that they're strong, clearly it's not. And it's partly also because of the tariff wars. The increase in the tariffs on China, the 100% tariffs on China, which help pull gold up, might also have tampered with the expectations of a Chinese economic recovery, especially because this type of tariffs could cause further slowing down of trade and economic activity in China. Plus, also, we've got to consider potential movements of industries out of China and into the other countries. At this stage, given that the gold to oil ratio is now over 70, and we have seen the gold to oil ratio rise above from 30 in, I believe, middle of last year to 70 this year, it's quite crazy. The alternative, while I focus on the gold to oil ratio as being great for producers delivering higher operating margins, the flip side of this is energy stocks might well be the next undervalued play.
All right. Thank you so much for that, Mr. Brian. And for those who are interested, Mr. Brian has also left a comment on LinkedIn, commenting on the gold oil ratio reaching for the 70 mark and the potential undervaluation of energy stocks in the US as well as Australia. We leave a link in the description to that reply. It's a good, healthy conversation that happened between Mr. Brian and another professional in the investment industry. Moving on to the ASX All Ordinaries Gold Index. The ASX All Ordinaries Gold Index gained nearly 1,500 points this week, rising from 16,310 points to 17,806 points. I don't think we will ever see an increase greater than that in any of our episodes from now on. Unless gold decides to go parabolic for the weeks to come and the ASX index rises by 2,000 points. But I don't think that's likely. This is the biggest increase we've ever seen in the ASX All Ordinaries Gold Index. And with each passing day, I regret not learning about investing at an earlier age, though I'm still only 22 years old. However, it was not the case throughout the world. In the US, the HUI index, which is also known as the New York Stock Exchange ARCA Gold Bugs Index, fell by 7% in a single day during the Friday session. And so did the GDXJ index, which is the Van Eck Junior Gold Miners Index. That also fell by 7.69%, which is nearly 8% on Friday trading after a sell-off throughout the entire session. So, Mr. Brian, what's your take on that? The ASX Gold Index, what's going on there? And what do we expect on Monday's open, given the US gold stocks move? Will we see a similar move in our Australian heroes, Evolution Mining, Ramelius Resources, and the like?
I like the fact that you've actually said you may not see a weekly increase as big as 1,496 points, because it seems like we have a habit of saying something and then the market sometimes goes the opposite way, or that we thought as we talk about the developments in the price of gold in some of our weekly market commentary, and we talk about how it's heading down, when we actually finish the episode, the price of gold actually goes up. So by saying that you are not going to see a greater weekly increase, you are just setting up for the fact that the ASX Gold Index might actually end up next week rising by over 1,500 points. I would be laughing. I'll be laughing a lot if that happens, and who knows, it could well be. But for Monday, given that the US Gold Index dropped by so much, by 7%, and that's the index. Some of these companies have probably dropped by 10, 15%. I do expect quite an ugly open on Monday. Fortunately, we have actually warned our readers, and we also have foreshadowed to everyone that we have been taking profits along the way. So hopefully our viewers and also ourselves, a portfolio is going to, it'll take damage, but we got significant cash on the side. So I am not too, I'm quite cautious. I'm a little bit nervous about seeing how bad it would be, but because there's significant cash on the side, I'll see whether there are any interesting value popping up going forward. So definitely a rough start to next week, but who knows what's going to happen for the rest of the week.
Yeah, for sure. It's very unpredictable considering the things that are going on right now. Even a small correction in gold can lead to these stocks falling down, and even a slight increase in gold, if it continues its rally, will still continue to uplift these stocks as they have been for the past few weeks. So thank you so much for watching so far, ladies and gentlemen. And this is the end of our free section, which is available to all our viewers. If you want to continue watching, please go to the GoldHub Australia website and sign up for our membership. It is absolutely free of cost. And with that, you will be able to move on along with us to the members only section of this video.